Traders might be hesitant to be short the gold market until the long weekend, says our next guest. So could the metals see more upside momentum? Joining us now is Peter Hugg, Kitco's Global Trading Director. Pete, good to have you back on with us.
Good to be here.
So gold catching a bid here, building momentum on continued uncertainty. Last time we spoke, you were still not convinced, however. How about now, Peter? Has the conviction arrived for you?
Well, it wasn't that I was bearish. I just, this market has been a technical market for the past month or so. I needed gold to break over 1260 with some momentum, which it finally did overnight. And, we suggested yesterday if we got the breakthrough 1260 with some momentum, we would probably see the prices up in sort of the mid 70s. I'm looking at 79 as a target, which we again hit overnight for at least the short term. So from a technical perspective, we got through the 200-day moving average with some momentum volume, and that's why you're seeing gold here at the sort of the 1276 range as we speak.
So, we're now trading above 1270, as you mentioned. Do you think we should prepare for a bit of a retreat here?
Not necessarily. I mean, I don't think the Syrian issue is a major issue here. It's going to create some babble between the Russians and the Americans, but I don't think the Americans will go in again into Syria because I don't think Assad is going to be foolish enough to drop another chemical weapon. I believe the Syrian situation from an American perspective is more concentrated on ISIS than on Assad. And I think they want to tackle that issue before they look for a regime change. But the bigger issue, is the U.S. Fleet steaming into the North Korean peninsula. North Korea issuing warnings that, any signs of provocation might bring on a nuclear attack. Again, if that were to happen, I think all bets are off. I mean, I couldn't even tell you where gold would go. I can tell you where the stock market would be, probably 30–40% lower if that happened. But it's that tension that is still underlying the bid for gold. There's really no other reason to be aggressively bullish gold right here. I mean, you've still got the equity market holding up. You've still got the 10-year bond in the U.S. trading around 240. With the Fed still looking to raise rates and to curtail their bond buying from the perspective of reducing their debt on the books from some $4 trillion back down to $2 trillion. So in the fundamental sense, the gold market I think is a little ahead of itself.
Right.
Given the situation with North Korea right now, I just can't imagine any gold traders being short going into the long weekend.
All right, let's shift gears here. Silver trading above $18 right now. I've spoken to a few analysts who are now looking to see if the metal can break that 1854 area. Can you see that happening?
Again, I don't think silver moves independently here. I think if we can get gold up through 79, which I see as the next resistance level, I think it has an immediate potential to go to 1287.92. At that level, that takes silver, in my opinion, at current ratio, up through 1854, 55 area where I see significant resistance. If we can get through there, I think some of the shorts are going to panic, and then we could, as I suggested this morning, see a move up to 1925.
All right, before I let you go, last time you were on, we spoke about physical metals and premiums. Is it still a good time to buy bullion for you?
Yeah, the premiums are still low. You've missed a $20-odd run on the gold market, but the premiums are still low. So if you are looking to engage in the physical market and you believe that this market is going to continue on an upward slope, if we can get gold over 1,300 and, silver back over 19, I think the physical buying is going to reemerge and those premiums are going to go up considerably from where they are now. For example, 100-ounce silver bar premiums are around 40 cents. You're going to see them back at 80 cents to $1.20 if silver can get a foothold over $19.
Pete, thanks for your thoughts. Happy long weekend.
Same to you. Thank you.
And thanks for watching this edition of Kitco's Gold Report. We're back tomorrow. Thanks for watching.